Hello and welcome again to another episode of the Uranium Market Minute. My name is Justin Hune. I'm your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in. Before we get into it, as usual, nothing in this video is intended to be investing advice. I am not your financial advisor, and this is not financial advice. Always do your own due diligence before making investments, and always take responsibility for your own choices. I was out of the office yesterday, so it's been a couple of days since I've done the market minute. We're seeing a bit of a pullback in the sector. If you are a Uranium Insider Pro member, then you did get my video update on the weekly watch list on Sunday, which I actually was hoping to see this. And it's really interesting because I did mention in the video that I usually do not receive from the market what I am hoping for. What I was looking for was an increase in the spot price and a pullback in the sector. Exactly what we're doing. I'm a heavy buyer currently. So if you are a member, you did receive that messaging on Sunday. Hopefully you've been taking advantage of that yesterday and today. I do expect this will reverse shortly, and we'll get into that when we get into the charts. Also at the top of the video, I want to mention and remind all members of the Uranium Insider Pro newsletter that this Thursday, November 18th, at 8:30 a.m. Pacific, 11:30 a.m. Eastern, we'll be hosting our members only webinar. We're going to have a CEO and chairman of the board from one of the companies that we recommend on our focus list. They'll be joining us for the second half of the webinar. These webinars, for folks that aren't members, they're pretty in-depth. We go usually about 2 hours. We go deep into the details on all the companies that are on our focus list. We talk about the sector as a whole, talk about what we're going to be expecting in the short, mid, and long term. And we go deep into the details of some of our trades, in particular, some of these options trades that I've mentioned in previous episodes, these vertical bull call spreads that are just absolutely printing cash. So we really look forward to seeing you there if you are a member. If you're not a member and you sign up before Thursday, of course, you'll be able to join us live. Anyone who can't join us live, there will be a replay up available for members on our website to watch the recording of that. So let's get right into it. Let's get into the daily scoreboard here. Spot price of uranium looking pretty strong here, up $1.50 since my last market minute on Friday. Today, again, is Tuesday, November 16th. We're up $47.25 a pound, up $1.50. Over the last 2 trading days, Sprott Physical Uranium Trust took in another $56.9 million in new capital and purchased an astonishing 2-day total of 1.53 million pounds of additional uranium. This really is a breathtaking amount of uranium that Sprott is purchasing here. I continue to restate these types of statements, but I just don't really know what else to say. It's incredible that this amount of uranium is coming out of the market, and that this new end user purchaser is just gobbling these pounds. It's pretty incredible. SPUT closed yesterday at a premium to NAV 2.52%, which means that as the market opened today, they could continue to offer new units into the open market. However, as we'll see in the charts, the stock is relatively weak, flat-ish, and spot is up. So we might be hovering right around that 1% premium to NAV. Probably not a lot of shares issued in the market today. Let's see, but I do have a feeling that they did do an additional purchasing because they ended the day yesterday with a healthy 53 million in their balance sheet of cash, enough to purchase another over 1 million pounds of uranium. Since the 17th of August, Sprott has raised now $973.5 million. They're pushing on $1 billion. They've got a little more than 300 million left on that second ATM. They have purchased 21 million pounds of uranium since the 17th. Now, once this ATM runs out, they will essentially refile for another allowance, another ATM allowance. It will likely be at least another $1 billion, if not more, considering how fast they've gone through this initial first almost $1 billion since the 17th of August. That's 3 months now. I keep reminding folks that you really can't annualize these types of purchases. However, they just continue to chip away day after day, week after week. This is an astonishing amount of pounds that they're purchasing. And while I don't expect this amount to be annualized, this is 21 million pounds in 3 months. So we're talking over 80 million pounds annualized. Considering that the market is going to produce in primary production this year, maybe about 130 million pounds if we're lucky. That's more than half of the primary production. That's almost half of the total demand. We're looking at maybe 185 million pounds in demand globally, and Sprott is consuming at this rate 21 million pounds in 3 months. It's 84 million pounds. That's 170 million pounds almost. They're almost consuming half of primary demand globally, annualized based on these first 3 months. I put out a tweet last week. In fact, I think it was on Saturday, that basically the way that we're seeing the Sprott Physical Uranium Trust action is, as if there's a ship that's slowly leaving a dock, right, or leaving a pier, there's a rope that's still accidentally tied to the hull. The rope is coiled up on the pier, and the rope continues to draw out into the sea as the ship motors out. That coil is of unknown length, right? So they continue to pull that rope. The coil continues to spool out into the sea. At some point, that rope is going to get pulled taut, and the whole pier is going to get dragged into the ocean. And the fuel for this ship is investor capital. So how fast and how far that ship goes out into the ocean is up to the investors. And this is why really aggressive investors are putting heavy volume into the Sprott vehicle, into the Sprott Physical Uranium Trust, because that purchasing is soaking up all of this above ground available inventory, and it's going to be pushing the price much, much higher. That's in conjunction with whatever the utilities are doing, which there's other buyers in the market, there's other traders in the market. Utilities are coming back to the term market. It's really, we're seeing in real time the tightening of the spot market and the resurgence of term demand. This is happening right now, and that's what we're witnessing with the Sprott Physical Uranium Trust is as the main catalyst for this. Turning to the sector equity ETFs, because I didn't do a market minute yesterday, these are 2-day totals. URA issued another 150,000 shares for the last 2 days. URNM issued an additional 25,000 shares, 5.7 million in mandated buying between these two ETFs. Nothing huge. The AUM's actually dropped about 18.5 million over the last 2 days. That's because the stocks are trading down. This looks to me to be a normal kind of higher low correction, which, as I mentioned, is exactly what I was hoping for this week. The two sector leading ETFs now have a combined assets under management of 2.52 billion, $2.5 billion AUM. Since in the first trading days of this month, they've increased by 350 million, the assets under management, the first 9 trading days of November. Just huge. Let's go ahead and take a look at the charts. Starting off with URA, we're seeing a pretty substantial selling day today and yesterday, down pretty big today. It's looking like it's down about 3.5%, about the same yesterday. It actually opened up and has been selling off throughout the day with a very small amount of dip buying. We're seeing volume actually increase on the sell-off. What that means to me is we'll likely see a little bit lower still. I would like to see this pullback make a higher low, maybe meet this 50-day moving average. This yellow line here is the moving average of the 50-day moving up. Looks to me like the indicators are showing that it wants to turn over a bit more, perhaps another couple of days down, maybe into the end of the week. I wouldn't expect much longer than that of this weakness before we see renewed volume come into the ETFs and the Sprott Physical Uranium Trust. Looking at the Sprott Physical Uranium Trust, moving down again today a bit, seeing a little bit of dip buying, but considering that we started the day at 2.5% roughly at a premium to NAV, and this the trust is moving down on the day while spot is moving up. In my opinion, we are right on the edge of their premium to NAV. Perhaps we're even at a slight discount, or even maybe just a little bit less than 1% premium to NAV. We'll have to see. Very low volume, I mean, relatively speaking. So most likely they haven't issued a whole lot of shares in the market, if any, today. But I do believe they've been in the market buying since we're seeing strong moves in the spot market. This is a very nice looking chart overall. Plenty of room to run on the indicators. In my opinion, a very good option here. Risk adjusted play in the sector. Cameco, pretty big down day. Yesterday was not as bad for Cameco as it was for the ETFs. Nothing really to speak of in terms of volume, not really trending up or down as far as the volume goes. In my opinion, this could see a little bit more downside. Maybe we see another higher low. It looks to me if we made a higher low in line with these previous higher lows, we maybe have another 5% down to go. That's what I would expect for the rest of the week, in my opinion. So let's take a look at the mailbag and see if there's a question for us here. This question comes from James. What happens to the sector if Cameco makes the decision to turn McArthur River back on? All right, great question, James. So Cameco has stated all along since they put their McArthur River mine, which is the largest uranium mine on Earth, essentially, capable of producing 18 million pounds a year of uranium, which is what they were producing prior to putting on care and maintenance. It's actually licensed to produce even more than that. I believe it's licensed to produce 24 million pounds a year. The mill has been going through upgrades and has the potential to produce more than that. However, since they put it on care and maintenance back in late 2018, they have stated all along that this mine will not come back online until they have signed sufficient long-term contracts to justify bringing the mine back online. They're not about to go through the immense expense and the immense undertaking of rehiring all of the staff to come back to run that mine, only to hope to be able to sell that into the market. They're going to secure a certain amount of production, future production from this mine before bringing it back online. Also, this mine is going to take, from the point where they announce that they are going to bring it back online, 12 to 18 months to get into initial production, okay? The first year of initial production, they will only be producing around 4 million pounds of uranium. So full production from McArthur River Mine is at least 24 months away from the announcement of bringing it back online. So what we expect from this announcement, we do expect to hear this announcement, by the way, because we're seeing the signals in the market finally kind of coming around. We do believe that Cameco is bringing more long-term contracts into play. They're seeing more interest from utilities, and we expect this announcement to happen at some point in the future. And when it does, there most likely will be a negative reaction from the market. And in my opinion, that negative reaction is going to be a buying opportunity. I'm not really planning to trade around that because guaranteed Cameco is not going to leak this information before they actually announce that the mine is coming back online, okay? So that's not something really, in my opinion, to trade around in terms of their conference calls. I don't like to trade around the Cameco conference calls. So, but with that said, if there is weakness following that announcement, in my opinion, that is an absolute buying opportunity, because that, while the market is going to interpret that as being, okay, here comes some more supply, what it really is signaling is that the demand is there to justify bringing it back online. That is a positive sign. That means term contracts are happening. And that, in conjunction with the spot price pressure that's happening primarily from financial interests, but also from traders, also perhaps even from some utilities, the term demand that justifies bringing McArthur back online is a huge positive signal for the sector. So whatever weakness comes from that announcement is a buying opportunity. And it's important to keep that in mind, that we really want to hear that McArthur is coming back online. We want to hear that. That means that there is some semblance of a healthy term contracting market. That's been a major part of the thesis all along. And while the spot market and the Sprott Physical Uranium Trust is taking all of the glamour away from the rest of the solid fundamentals of the sector, they both really still matter. So that's a great question, and it is something we expect to hear. I don't know if it's going to be the next conference call or the one after that or the one after that. Some point probably within the next 12 months, I would guess, is when we will likely hear that announcement. And when we do, if the market reacts poorly, in my opinion, that's a buying opportunity. That's what I'm going to be looking for. And that'll be a really positive sector sign for the sector. So great question, Jason. Thank you for that. All right, we'll see you guys tomorrow. Thank you for being here. And as always, if you're interested in receiving a sample newsletter from us and seeing some of our stock performance, please go ahead and click the link in the show description. Also pin it to the comments. That will allow you to download a free sample of our newsletter. And if you're not already a member and you would like to join us this coming Thursday for this members webinar, go ahead and join before then. You'll be able to join us live. It's always a good time. We get really geeky and get deep into the sector and deep into our focus list picks. Like I mentioned, we will have a couple of special guests on this webinar, the CEO and the board chairman of a company that we own. And Also, I will again reiterate that we will be raising the price of our premium offering, the Uranium Insider Pro newsletter. We'll be raising that by $200 on December 1st. If you are not a member and you are interested in join before that date. You will lock in the current price for as long as you want to be a member. A year from now, if you buy currently, a year from now when it comes back up, if you want to remain a member, you will again only be paying the annual price that you joined with, not the higher price at the time. So we'd love to have you on board. We have a great community going. And either way, really appreciate you being here. Please like this video. Please subscribe to the channel, hit the notification bell. You will be notified whenever we update this with a new episode, which is almost every day. And we will see you tomorrow. Thanks so much. Cheers.